Well, hi everyone, and welcome to the Buffett and Beyond Saturday Market Recap Letter. And this is July 15th, 2023, and the month is half over already. And remember, folks, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And this week, the market, wow, what a great week. Problem is the S&P 500, or most of the S&P 500, is just not partaking in this latest move. However, the S&P 500 is the highest it's been in about a year and a half. So there's 7 or 8 stocks in there that are doing really well. In our weekly stock analysis, well, let's talk about one of those stocks that are doing so well. Microsoft will rise 100 points if the 2024 projections hold true. This stock continues to increase its earnings through all kinds of weather, and we're going to see all those numbers as we go along. In our ETF video, well, folks, I hate to keep beating the same drum, but our semiconductor top 5 stocks are now up 85% year to date. I mean, really, are you serious about this? Yeah, we are. We're going to show them to you, too. All right, folks, let's get going. And here are the volatility bands once again starting to widen out. And these are the red bands, and in the middle is the 20-day moving average. So this past week, or right at the beginning of the week, we came off of that 20-day moving average, moved right up above the top band, and usually when that happens, the market retreats and then goes back up to test that area all over again. Like in here, went above that band, came back down, hit the 20-day moving average, then went back up and tested this whole level once again, went back down, and then tested, and we have a little gap in here, look at that, but now we are above the recent highs in the market. So this market just doesn't want to stop, even though most of the stocks are not participating. Most of the stocks in the S&P 500, that is. And then down here we have a pretty neutral, slightly trending down, but this blue line has crossed over to the upside of this red line. So we just kind of call that a neutral area in here. And we want to see if this market can continue doing what it's doing, because, folks, it's earnings seasons. And then just yesterday, when the banks came out with their earnings, JP Morgan beat both earnings and revenues. And so this market just said, okay, we're going to go up again. And that's what they did, folks. Now, when we look at the black line here, which is the S&P 500, and this yellow line, or the mustard colored line, is about this is the 492 stocks they're talking about. This index fell down early this morning when the S&P was really doing pretty well, and the Dow was actually up about 150 points. And they're calling them 492 stocks, just took off to the downside. So this has us worried, because they didn't even try to participate in this morning's or in Friday morning's rally. So the S&P went up, the Dow went up quite nicely because of JP Morgan coming out with good earnings, and JP Morgan is one of the Dow 30 stocks. But we were disappointed to see this turn down immediately as soon as the market opened. So we're worried about that again. But don't forget, back in here a couple of months ago, we were really worried that the market was just going to tank, because just a few stocks were partaking in this move in the market, and you know them: Amazon, Apple, Microsoft, Meta, Nvidia. And so the other stocks did not partake in that index. So the capitalization weighted S&P 500, which is the black line and which is the index that everybody talks about, is different than the equally weighted S&P 500 index, which is this yellow line. So in other words, if you say Digital DataWack carries as much weight as Microsoft, then this is the line you want to follow. And this is what technicians use when they look at the market and they say, okay, it's going up. But gee, when their equally weighted comes along, it's not doing so well. And then we had the nice rally, we had the decline, and then this bothers us in here because it fell so early this morning. Maybe I should get up a little bit later and not watch things like that. But that's what happened. And so when we look at the QQQs, we are looking at this green line, which is the 20-day exponential moving average, and we keep talking about the reversion to the mean, and we get the reversion to the mean every now and then. But the reversion to the mean in the QQQs, now this is the NASDAQ 100 stocks minus the financials, when it reverts back, it bounces off that line. When it comes up, it gets ahead of this 20-day exponential moving average, comes back down to it. And so now we're at the top part of that range, and it is down slightly as I'm recording this, just a few minutes before the close of the market. But we do expect it to maybe come back down again and test this 20-day moving average. However, down here, when we look at the intermediate term indicator, boy, doesn't it look like it wants to turn up? So those semiconductor stocks, those tech stocks, they are pulling this market up, and the QQQs are doing very, very well. It's up under 40%, but it's in the high 30s right about now. And I'm talking about or since the beginning of the year to date. But this is looking very, very nice in here. So even though we're looking at a little reversion to the mean, this indicator down here is telling us that the QQQs are doing very, very well, maybe leading another rally, which will continually push the S&P 500 to the upside. And protection, we have 3 puts. It's about $135,000 portfolio, and we buy the SPY puts. Now remember, the SPYs are like the SPX. They both represent the S&P 500, but the SPX is 10 times more than the SPY. So the SPY is the S&P 500, SPX, which is the option symbol for the S&P 500. The SPY is 1/10 of that. So if you want to protect a smaller part of your portfolio, or you have a small portfolio, you want to use the SPYs. So 3 SPYs cover the $135,000 portfolio, and we're happy with what we have right now. But this coming week we'll probably replace this, because the puts are very, very cheap right now, because the market is going up, and therefore protection or insurance gets cheaper. So folks, we had a good week this week, and wouldn't you want to be on the beach, or at least in this little park in the shade, watching the beach this weekend like Jimmy Buffett is? Why? Because it's going to be really hot this weekend all over the country, and this is a good place to be. So sit in your little lounge chair in the shade, and you can watch the beach and watch the people swimming and the surfers out there, because it's just too hot to be out there, folks. So you clear your heads this week. You had a good week in the market. Have a good weekend. Most of all, stay safe, be with your loved ones, and we'll see you back here on Monday.